real question. Is 2026 your moment or another year to wait? The good news is you don't need to guess or gamble. There are real indicators, from rate forecasts to affordability trends to early market data, that can help you decide if buying in 2026 makes sense for your situation. We help military, veteran, and civilian families make smart moves for stronger outcomes, especially when the market is confusing or shifting. According to recent forecasts, many economists expect the 30-year fixed mortgage rate to settle around the low to mid 6% range in 2026, possibly sliding slightly toward 5.9 by year end. At the same time, home price growth after a rapid sprint in recent years is anticipated to moderate across much of the U.S. Many markets are projecting small increases or fairly flat pricing. Demand may rise, according to a survey of leading lenders. A majority predict a rebound in mortgage originations and home sales as rates and affordability stabilize. Translation: the market may remain stable, but the perfect conditions, ultra-low rates plus low prices, are unlikely to return anytime soon. Your cost to wait is something you need to consider. If you wait months or quarters anticipating lower rates, but home prices tick up even modestly in that time, your buying power can shrink. Even a 3 to 5% rise in a home's price can erase the benefit of a slight rate drop. Demand can surge and eat up inventory as rates ease and mortgage applications rise. Competition could ramp back up, meaning bidding wars, fewer concessions, and less negotiating power. Not to mention your opportunity costs. The window of opportunity might be narrow. Lower rates and softer pricing coming into the year may not overlap throughout the year long enough for many buyers. When buying in 2026 makes sense. If you check these boxes, buying in 2026 could be a strategic win. Do you have a stable income and are either VA eligible or can qualify for another down payment assistance loan program? Or can you afford the required down payment? The mortgage payment will fit within your monthly budget. Of course, you can refinance later, but that has to make its own financial sense. So it's important your budget isn't reliant on a refinance later. Lastly, you value control over your living situation. You don't want to be at the mercy of a landlord, and you want the opportunity to get something back from your monthly housing expenses. For VA qualified buyers, the math is often even better. No down payment required and no mortgage insurance, and flexibility to use your benefit multiple times to build a portfolio. Even if you feel like buying a home is out of reach for 2026, any steps you take to make it more attainable for you in the future is going to improve your financial health for that future. I'm Julie Calza, leader of the Calzaco team, Arizona's #1 choice for VA home loan buyers and sellers for nearly a decade, and ranked in the top 0.005% of the real estate industry nationwide. When to wait to buy? When your budget won't allow for you to get into the market. Your first home will rarely be a dream home. Your main goal is making the investment because you can ride that home upwards and later use it as leverage to get into the dream home in the future. Not to mention more stability for your family. Now, for real estate to serve you well, you need to make sure it's in a desirable area and has traits that would appeal to others. In the event your budget won't allow for you to check those two boxes, then take 2026 to do your steps to prepare. Don't jump the gun. My other videos can help you maximize 2026. Here's the bottom line. You don't need to wait for perfect conditions to make a smart move. 2026 may not be ideal for timing the lowest rate ever, but it could be perfect for locking in value, setting roots, and putting yourself ahead of rising prices. If you want to run your numbers side by side, buy now versus wait, reach out. We'll walk you through what's real, what's possible, so you can determine what's best for your life.